I've come up with 4 rules that if you're a passive investor, you're really going to do yourself a whole lot of good in terms of vetting your sponsor. The first is make sure they have a track record, gone full cycle on deals. Anybody can buy, but if you can buy, operate, sell, make money, and prove that over and over, that track record matters. Rule number 2, make sure they have experience. You need to make sure you invest with somebody with a management team that is experienced enough to navigate this business. Number 3, you got to make sure they're transparent, extremely important. And then finally, are they putting you first? That's rule number 4. What does that mean? Well, first of all, you got to read the documents to figure out how are their fee structure. If you see a lot of fees, you see crazy waterfalls that are multi-steps deep, like run for that stuff. So those rules aren't perfect, but they really go a long way.
Welcome to the Path to Passive podcast, where we talk about building wealth and empowering lifestyle through commercial real estate investing for tech professionals. I always wish that other tech professionals reaching financial freedom had documented their journey along the way, so I'm doing it for the rest of us. Join us as we explore stories, many failures, and lessons learned along the way. I hope you enjoy and subscribe. All right, welcome to the show. This is Path to Passive. I am your host, Steven Arita. Today, I've got Ken G. Ken, thanks for being here, man. You've got a pretty cool background from starting out as a loan broker and then kind of looking at what your clients were doing, seeing what was happening around you. I mean, just having that power of observation and taking action led you along the way to become a CPA, and even more so, think about, well, wow, my clients are in real estate. I should probably be doing that too. So I'm super stoked to have you here, man.
Thanks for having me. Looking forward to it.
Yeah. Fill us in a little bit more about that story. What was that like to be at Deloitte as a CPA and just see your clients and as they were in real estate? Like, what were the maybe 1 or 2 things, if you can remember, that was like, aha, this is what I need to do moving forward?
Yeah, so it was more about my family. That's what drove me to real estate. It's what drove me to make it change. Let me just say that. So I used to do my daughter's 3 a.m. feeding. This is a really long time ago.
Mhm.
And 3 a.m., remember, I was working at Deloitte at the time, really quiet house. Awesome. If you're a dad, you know what it's like to hang with your daughter. And it was cool. Every night, 3 a.m., roughly, plus or minus, you know how kids are. And until I realized that 3 a.m. with my daughter was kind of crappy. That wasn't good. I mean, it was quality time, but it was 3 o'clock in the morning, and that was the best I could do. And I just came to the realization that my family was going to grow up without me. And so I knew I had to make a change. I'm like, man, this isn't what I bargained for. I thought I did everything right, and clearly I missed something. I just didn't understand what was going to happen. So the real estate thing came because when I spent 5 years as a commercial lender, all my clients were in real estate. How did I know that? Because when you're their banker, you get to see everything.
Yep.
So I saw their financials, knew they were making a killing. You know, you do a multifamily and some other types of real estate. Then I go to Deloitte, and the Cleveland office at Deloitte had the biggest real estate tax practice in the firm. It's like, man, there's like real estate everywhere. And trust me, these guys at Deloitte, I mean, that's a big firm.
Yeah.
If I told you who these people were, you would know their names. They're household names, these clients. So I'm like, man, I feel like I need to do this, but I got to figure it out. And so that's that. I mean, my family drove me to there. It drove me to make a change. And then secondly, real estate, I was just around it so much. I said, all right, this is what I got to do. And the other thing I liked about real estate, as I thought it through, I could do it wherever I want.
Yeah.
I could do it in Cleveland. I could do it in Florida. I could do it in Texas. I could do it wherever I want. Wherever I decide that I want to go, I can go and buy real estate. So figured it out. It took me a year and a half. It took a very long time to figure this out because back then, your podcast didn't exist. Nobody's podcast exists. No coaching and mentoring programs were there except for the Carlton Sheets no down payment single family house thing. So spent 18 months figuring it out, going to apartment association meetings, got enough guts to buy 3 small apartment buildings in Cleveland, sold them 3 years later, made $500,000 and realized, holy crap, I can do this, right? Because until you actually do it, everybody else is doing it. Your brain just doesn't take that leap that, oh, I can do this. Now I got to roll. And so that's kind of how it started. I mean, there's a lot of things that happened in order there, but I would say the driving force is my family.
No, that's really cool. And there's a couple nuggets that you touched on there too. And It's amazing what we'll do for family, what we'll do for loved ones that will kind of motivate us to take that next step. One of the things I have saw from you as one of your success formulas is knowledge builds confidence, confidence leads to action, action leads to success.
Yeah.
And I think I had seen that you had bought a 28 unit building, but it sounds like that came later on after some of these smaller, like triplexes you said or so?
No, so I never did any. I tried to figure out the 1 to 4 family world. Like I looked at duplex. I just couldn't figure it out. I want you to remember back then I was already working like 70, 80 hours a week at Deloitte.
Yeah.
And I couldn't figure out how to make like a duplex make money. I just couldn't. All right. I'm better at articulating it now, but as I was going through it, I'm like, how do I know how much it's going to be worth if I fix it up? I don't know. I couldn't figure that out. Right. And now I know and understood why I couldn't figure it out. It's because the value of that house is going to depend on what the neighborhood is, right? Whatever the neighbor's houses sell for and so on. I had trouble figuring that out. The other thing that I thought, how am I going to hire people to do work?
Mm-hmm.
I can't. There's not enough money. There's simply not enough money. So that's what that drove me to buy something big.
Right.
Back then, this was big, but I had enough money in the budget, having a rent coming in now that I could pay someone to help me, because there was no way I was going to go turn units myself.
Because you treat it like a business.
Yeah, that's right. Yeah, yes, that's exactly what happened. And so that led me to my first deal, which was 28 units. Second deal was 24 units. Third deal was 22 units. They all happened to be in the same area, the Shaker Square area of Cleveland. And then when I sold them, that's when, just the thought I happened to have $1 million in my bank account one time. It was ridiculous, right? So it seemed.
Talk about breaking beliefs, right? You've mentioned a couple of times now about looking at those like Tony Robbins or Grant Cardone, et cetera, to help build and break those beliefs, because properties and all this stuff are exactly that. But what's in our head is what oftentimes is that challenge or that blocker, right?
That is the thing. That's one of the biggest life lessons I've learned, that you are where you are because you've chosen to be there, right? And a lot of people don't like hearing that, but now I've learned, wait a minute, I can buy it. Most people that start out in my chair doing what I do, they didn't have any money when they started. And that's the number one thing that people are like, I don't have any money. How could I buy $1 million apartment building, a $5 million? Like, that's ridiculous. Like, stop the madness. There's no way I can do that. And that's not true, because most people that start out in my chair, I mean, they're the ones doing the work. They're the ones tracking the deal down and managing the deal and everything else, right? And so what they don't understand is that rich people, they don't want to do the work anymore. They did the work. That's how they got rich. So now they want to give you their money, as long as you're willing to do the work, right? That I didn't understand that. I just didn't. So back then I thought I didn't have a big Rolodex. I mean, I started out really small. And then what happens over time is you solve this problem and then that problem. 2008, 2009 hits, COVID hits, hurricanes hit. I mean, just thing after thing. And you're like, wait a minute, I can figure all this out. 9/11 came, and all of a sudden you realize the only reason I'm not bigger, I'm not further along, is because my head stopped me. And that's the problem. It really is in your mind, right? I try to tell people, like, imagine that you already are where you want to be. And people are like, shut up. That's just stop. You're playing a head game with yourself. Mm-hmm. But what happens is your brain makes a different decision. I'm now an apartment owner. Obviously, I own plenty of properties. My brain is wired that this is what I do. I already do it. So what do I wake up in the morning? What am I going to do? As opposed to what it was before, when I want to be an apartment owner. Now my brain doesn't know what to do. It doesn't have the decision making wired in. And if you can do that thing that I just talked about, act like you are an apartment owner, you will solve problems differently. Your brain will think differently. And that's the hardest part for people. It's not actually finding the money. It's not actually learning the business. It's actually getting through your thick skull that you can actually do this thing.
Is that when did you realize that? And let me frame this up a little bit.
Yeah.
Maybe it's like, this is something, lots of wisdom comes through action, right? And of course, studying things and other people and who you want to be, et cetera. But like you just said, this is
seems like it's one of those things that really you have to be at a certain point for it to click, right? It's one of those the teacher will appear when the student is ready type of things. And
Okay.
so I'll ask it this way. Like you said, you didn't really have much of a Rolodex when you started. You didn't really
I
have
am
much of
not.
a
Yeah.
network or anything. How was that? Did you just think about who do I know and just start knocking on doors, so to speak?
Yeah. So, I mean, it happens a little bit at a time, but there are a bunch of little bitty problems to solve. So I bought those 3 deals. I got to rewind the story because it's always a story. I went to all these apartment association meetings to try to learn the business. That's all there was. They were really boring. And all the people that were sitting with me were generally property managers, leasing agents trying to figure it out.
Yeah.
I'm like, okay, these are great people, but they can't help me get to where I need to go. So I said, all right, that whoever is speaking that day on that night, they must be smart or
Sure.
somebody wouldn't have put them up front, right? So I said, all right, I got to get to know these people because these are the people that are going to help me figure this thing out.
Yeah.
Well, as it turns out, one guy is an eviction attorney. His name's Gary. He was responsible for a lot of my growth because we got together, we developed a relationship. Then we're like, hey, we should do a deal together. And I said, Gary, dude, I don't have money. You have a lot of money. Like, I can't match you dollar for dollar.
Yeah.
I just can't do it. He said, you don't need to. He goes, look, you got to put in a little bit. But if you do all the work, put in a little bit of money, he has the balance sheet, he has the liquidity, he put in most of the money. He says, we'll split the profits 50-50. I'm like, holy crap, are you serious? Like, I'm in. Like, wow, what just happened to me, right?
Right.
And so it's always a joke around my circles. You got to find your Gary because you probably do. I found experience, I found liquidity, I found a balance sheet, and I found somebody who didn't want to do the work. Very successful legal practice, did really well, and we made money together because I did the work and he made it happen, right? He's an eviction attorney. He knew all the owners in town.
Yeah.
So what happens when you start off in this business is everybody has some kind of story like that. Somehow, some way they found someone who wants to make money, doesn't want to do the work, whatever it is, right? You've got to just keep finding that. So in my world, it started back when I went to those apartment association meetings. For other people, they go to networking events, they do our training programs, they're investors, who want to figure this business out so they make better investment decisions. It depends. Everybody's story is a little different, but I guarantee you, every person that does what I'm doing now, they have a story. It's different, but they have a story that completely changed their life. And it didn't happen probably by accident.
Right. They were looking for it.
You have to be looking for it. Yeah, you have to be looking for it. And I remember the first deal that I did, it was a whopping $460,000 mortgage I signed on. But I know you laugh, but at the time it was ridiculous. I mean, there was no chance I could pay that back if this didn't work out. And I remember, and this is the thing that I think also stops a lot of people. Do you ever, you probably never have, you've never been stressed enough that you feel like you have a golf ball in your throat? Stress does a really weird things to your body, right?
Yes, it does.
And it was hard to swallow. I was like, man, am I getting sick? Doc's like, no, man, you're just stressed out. But I pushed through it anyway. I don't know why. I'm not normally just a brave guy, right? But I pushed through it anyway. And after I closed, the golf ball went away and it never came back. And that's the thing, right? You got to push it once you get to that top of the mountain, right? It wasn't even a mountain back then, but to me it was at the time. So it's a combination. The comment that you made is a good one, but it's always a combination of a whole lot of things coming together. You have to push through, no doubt, stress. You have to push through your belief lid. You just got to figure out how to do it and then find someone that's willing to help you.
As you've gone through those different plateaus, it's one thing sort of in my brain quote, new level, new devil is the new adversary, new challenge.
Yeah.
For it is exactly that, right? These different mountains, so to speak, these plateaus, right? Have you come up with a process, almost formulaic in a sense, or a pattern, so to speak, of how you go through and bust that new challenge, bust that new belief?
Yeah, it's interesting. I don't know that I think of it quite as a formula, but what it always starts with is, wait a minute, why am I not doing this? What's stopping me? Why do I think I can't do what that other guy's doing. That's ridiculous. He's no smarter than me.
Right.
Right. And you have to convince yourself of that.
Mhm.
And so that usually is the thing. No, I can go do that. And then you've heard the burn the boat thing, right?
Totally.
Burn the boats. You literally have to do that. The problem is doing it is scary as hell because there's no way out. You either figure it out or you fail, and nobody wants to fail. Failure stops a lot. This fear thing that I've learned with people is really powerful, right? Part of in the beginning in my world, even though Deloitte was an awesome place, and I'm sure there's some Deloitte listeners here, it is a great place to work. The problem is you never know in the corporate world when you're going to walk into work one day, all happy, go lucky, and they invite you into their office and HR follows you in and it's the end of your career there. And you had no clue it was coming. That fear was real, right? When you have a family and you know that you just piss off the wrong guy or gal and you don't even know you did it, end your career. I mean, fear is a motivator, right? So fear gets you moving, but it also stops you.
Right.
That's what I find. People are afraid they're going to fail. What if I go after this deal, get it under contract, and then I can't raise the money? All right, we'll solve that problem. Go raise the money first.
Right.
That's what we do. We're on Fund 6, and we raise the money first. I don't have that problem anymore. See, I got a fear. I got to figure out how to get over this. Whatever that problem is, this is solvable. Let's just go figure it out and do it. That's the secret that most people, that's the formula. It's not a formula, but it's just the way you have to approach things. It's the mindset. I mean, look at all those successful people in this world. Do you really think they're all smarter than you or me? No.
But to your point, it is, we'll throw some pop jargon just around for a second to be clear on communication. To your point, though, the emotional intelligence to actually pay attention to the fear or whatever you are procrastinating on, but we'll just call it fear just to be super direct, and then say, well, how do I solve that? Right. Versus it having any other making you go into a panic or anything else like that. Like obviously you go through the reps as someone analytical, et cetera, to like divest yourself from some of those emotions. But at the same time, it's like, how do I solve that? So let's flip this to a point. You have a book you wrote, you have a ton of education. You've talked about some of the different courses which also exist on your site, and look as well as other podcasts on there. I saw one from Jake and Gino too. Pretty cool.
Mm-hmm. Yeah. That was fun.
Yeah. And one of the things you talk about is, or at least I heard, I hadn't got that much into there yet, so feel free to correct me if I'm wrong here, but you talked about how one of the best places for people to start investing is as a passive investor, right?
That's right.
Because they want to sort of stick in their profession, right? Maybe they like it or some other reason. So where's I wouldn't say what's your stance, what's your thinking, what's your mind? What can you expand on this? Maybe this potential conflict where it's like, as an employee, you have to take ownership, right? You have to go find ways to, we'll say, multiple streams of income, or find ways to protect yourself and your family. All these investors have families too. But at the same time, many of these investors maybe should stick in their job as well while they invest. Yeah.
So I think, we have, let me back up. We do the education side of our business because we were a couple of things. One, there were a lot of people out there not doing it well, and we got tired of watching people lose money. Yeah. Secondly, we did it, a little bit of it was self-serving, because if enough people lose money because they were baited into investments by people that didn't know what they were doing, eventually the SEC is going to come in and squash it, right? Yeah. Well, that's the private equity world. That's what we are. So that's why we got in the education side. I want to be crystal clear on that. We're first and foremost a private equity firm. That's what we are. We just happen to buy real estate. We raise money, we go do it. Now, when people come into our world, they're trying to figure it out. Should I be passive? Should I be active? Right? They're trying to figure it out. And what I tell most people, number one, real estate, you can do this at your own pace. I mean, you can take 10 years to figure this out if you want. There's nobody that says you have to rush, number one. Number two, the fastest way to get into the real estate business is to invest with somebody. Don't put all your eggs in one basket. We don't even want people investing all their money with us, right?
Absolutely.
But do that. Why? Because now you're in the game. Now you're going to be learning from a sponsor, right? It's learning from whoever's managing the fund. Hopefully they communicate. Hopefully they do regular updates like we do on webinars and you're just going to start immersing yourself. Now, you have to really look at your professional life. We've had people, Harvard educated physicians that want to quit their job and learn multifamily. Time out. Stop the madness. Like, no, I'm not going to participate in that. Like, that doesn't even make sense, right? So a lot of people, everybody thinks the grass is greener on the other side. That's the first thing. It's not, okay? Real estate is a very long-term thing. So if you're going to invest passively, ask Warren Buffett, he'll tell you should understand what you invest in. There's nothing wrong with learning a little bit about what you're investing in. So learn a little bit about the business, continue to do what you're doing while you're building this side passive income thing, right? That's the most safe way to do it. That's the way most people should do it. Then after a while, you will decide, okay, I see what's going on here. You start to understand the business better. If you want to flip over and start doing your own deals, you can do that, right? But if you're sitting in my chair, this is what I do full time. It takes a lot of time, right? Because if you're out trying to buy deals, you're competing against guys like me that this is all we do.
Yep.
And it's hard to compete again if you're doing it on part-time. And I'm not saying you can't do it. I'm just saying it's hard. So most people, actually what they do is they learn a lot about multifamily and they're like, man, this is a lot of freaking work. Like the people that do this, they're good. Like they've really committed to it. You know what? I'm pretty sure I can make more money if I just invest with you. That's where probably most people end up. But having gone through some sort of education program, they are so much smarter of an investor because now they can spot the investment, the sponsor who doesn't have a track record and experience, and they can spot things. They know what to ask. They're just so much smarter because you're not relying on a financial planner here to put you in these deals. You've got to make the decision yourself. Is this sponsor worth investing in? And the only way you can do that is understand the business at least a little bit.
Yeah. Yeah, absolutely. I mean, the more the better, of course. Like, so you mentioned some of those things, but also asked certain questions about the assumptions about how did you get that number, that pro forma?
Yeah.
Right?
How do you staff that property? And you know what happens when they don't know? You now know they don't know what the hell they're doing. I want you to imagine. This is what I always tell people. I want you to imagine going onto Shark Tank and standing up in front of Mark Cuban and Mr. Wonderful and Robert Herjavec, and you don't know your business.
No.
It's going to get ugly fast. That's what should happen in this business, right? That's how you should vet these people. Now, most investors don't get that kind of time, nor are they brave enough to ask some of the pointed and direct questions that you really should ask of the sponsor. So I know you didn't ask this, but over the years, I've come up with 4 rules that if you're a passive investor, if you just look at these 4 rules, you're really going to do yourself a whole lot of good in terms of vetting your sponsor. The first is make sure they have a track record. Well, duh, of course, Ken. No, here's what's important about the track record. Gone full cycle on deals. Anybody can buy, but if you can buy, operate, sell, make money, and prove that over and over, that track record matters. That's rule number 1. Rule number 2, make sure they have experience. Duh, right? But guess what? Why do we need experience? We need experience because we didn't know COVID was coming. We didn't know 9/11 was coming. We didn't know high inflation was coming. We didn't know a war was coming. We don't know any of these things. So you need to make sure you invest with somebody with a management team that is experienced enough to navigate this business, because that's what they're investing in, through these challenges. Number 3, you got to make sure they're transparent. Extremely important. So many times we hear, yeah, as soon as I invested, I never heard from the guy for a year. I'm like, that's ridiculous, right? I mean, this happens, right? And this is the stuff that I'm worried about. You can't have this stuff happening in this business. We do monthly regular webinars, twice a month we're on. People come ask us questions about anything in our portfolio, right? That kind of transparency is really important. And then finally, this is the one that always gets people, because it's hard to figure out. Are they putting you first? That's rule number 4. Are they putting you first? Now, what does that mean? Well, first of all, you got to read the documents to figure out how are their fees structured. Is it possible for them to make a whole lot of money, meaning the sponsor, and you not do well, right? You got to kind of parse that. If you see a lot of fees, you see crazy waterfalls that are multi-steps deep, like run for that stuff. Even things like, hey, after we refinance you, you're out of the deal. Like, don't let people do that stuff to you. So they got to put you first, right? So what I've learned, now that we talk to a lot of investors that have lost money, if every time you look at their situation, they've probably broken 1, 2, maybe even 3 of those rules, right?
Yep.
So those rules aren't perfect, but they really go a long way. They seem common sense, but if you put them down in front of you and you're having that conversation with the sponsor, you've got to get in your gut, trust your gut. You know what? This guy, yes, he checks all the boxes. Still not going to be perfect. We can't make that risk-free, but boy, you're going to be in a lot better position.
Yeah, I would almost say that fourth rule should almost be number 1, right? With the,
it is, but it's just harder to figure out.
Yeah,
it just is. You got to dive in a little bit more. That's why I put it last.
Got it. Yeah, the making sure that sponsors align to the investor. The people don't get paid unless you get paid as the investor. There's alignment there.
Yeah,
most certainly. I think that one is like such a business 101 thing, but it's one of those, I don't know what the fallacy is of like, some people will think they're smart in one area, but doesn't carry over to another area because you just don't have the experience. You know what I'm talking about?
Yeah. No, I do. Yes, I do. See it every day.
Yeah, no doubt. One of the things I thought was really cool listening to you about specifically the tie-in here as this conversation has sort of unfolded organically well too is how you were just talked about solving problems or solving fears, right?
Yeah.
We'll figure out a catchy way to copyright that later, Ken, but it's feel the fear, figure out how to solve it, and then turn that into a strategy, right? And you're in Cleveland right now, but you invest in places like Florida. Mm-hmm. And one of the things that you had encountered was the buyers there were doing a lot of syndications. So you had solved that with, instead of coming to the table and say, we can find the deal, underwrite it, lock it down, and then say we have to raise money, you will actually go there and say, hey, we have the money already. Everyone else coming to the table still has to raise. So that's a differentiator.
And you did your homework. Yeah, go on. Yep.
A little bit.
A little bit. Yep.
And so I think that's really cool because that not only helps you to get it, but also probably more favorable terms. Is that what sometimes happens?
Yeah. So what happened, you hit the story. Let me just fill in a little bit, the few gaps that you left. And that was, we're getting deals in Florida, but in Florida, 20 people bid on a deal, 30 people, 40 people. You're like, we're all syndicators. Okay, why would you pick me? Pick me, right? Pick me. Well, Ken, there's only one way I'm going to pick you. You got to pay more.
Sure.
I'm like, well, that sucks. And then I have to run around. Have you ever tried to raise $5 to $10 million in 45 days? That's a stressful event. Okay. So I said, man, this isn't good. You're going to lose a lot of hair. This is just brutal. Very stressful environment. So I said, at Deloitte, I did a ton of private equity work. I'm like, this is the model. You need to go raise the money. And then guess what? By doing so, you've now automatically differentiated yourself.
Mm-hmm.
Guess what? We're on fund number 6 doing that. I was not wrong. We always raise the money first. We're always raising constantly for the next deal. And brokers know that. Guess what? We've taken ourselves from the pack to now we're above the pack. And that's really important, especially in good markets. You're not the only smart guy that wants to be in a good market. So you got to figure out how to differentiate yourself. And that's what you do. Yeah. And that's how we do it. And do we get better deals? Yes. Do we see deals months before other people see them? Yes. Do we sometimes have the ability to lock them down before they go out? Yes.
Yeah.
Why? Because sellers and brokers, what do they care about? One thing.
Certainty
Closing.
Yeah.
And especially now, guys, we already raised the money. You don't have to worry about that. And just our reputation, right? Now you got to couple that with a decent reputation, because if you're a jerk and you're going to retrade the guy 6 ways to Sunday, you've just eliminated all your benefit, right, of having that money raised. So it's a couple of those things put together. But you said, that's me solving a problem. I'm like, okay, this problem sucks. Then the next problem, as soon as we went to the fund model, everybody said, no, none of your syndication investors will follow you. They don't like that model. I said, really? I said, all right, that's good information to have. I said, so let's just do this. Let's make our fund look exactly like our syndication. Terms all the same. There's a novel idea. Mm-hmm. So the investors don't feel a big difference, right? Because everybody expects everything to change. It doesn't have to, right? Again, another problem. And you just, every one of these problems are solvable. You just got to think it through.
Can you expand? So before you expand on that, I'm curious to elaborate on there, because there's a lot of passive investors listening here. Is you were talking about some of the favorable terms. So you mentioned, I think, two things about seeing the deal first, right? Because pocket listings, that kind of stuff. But what are some of the other things that you might get that become favorable, more favorable terms? What are some other favorable terms that you might get by having money first?
What else? Well, I mean, getting the deal, getting it at a better price because certainty of close really matters. Massively less stress. I mean, I got to go back to, if you've syndicated a deal, you understand the process. You get it locked down, and then literally you are running around like a nut trying to raise this money. And it is super stressful because what happens is, let's say you're coming close to your deadline, you got to be closing, but you don't have all the money raised.
Yeah.
And now what do? You go back groveling to the seller. Can I please have more time? Well, that's the worst thing you could do, right? Because that seller knows he has you over a barrel, and that's going to be a disaster. So the stress thing is the most important part of that, right? It creates a business model to just make sense to everybody.
Cool.
Of course, you're going to get a better deal when you have cash in the bank. Duh. Yeah. I mean, it doesn't take a rocket scientist to figure that out. Of course, brokers are going to want to push the good deals to you. Of course, they want to close. They don't want to go run around showing the property 78 times and listening to 4 million questions from dopey buyers. They don't want to do that. If they can lock that deal down, they're willing to do it. Perfect. So it solves so many problems.
Got it. And make the fund look like a syndication. The difference being, right, with the syndication, it's one asset, that one deal that they invest into, versus with the fund, they're really investing in a concept, right, of that kind of buy box.
They're investing in us. Because that's really, you want to know what passive investors are investing in? Us. Because you don't know what's coming tomorrow, right? Of course, they're buying a building and location and all that stuff, but that's chosen by us. And then how we respond to the market, whatever happens, that's on us. So don't underestimate the jockey, right? You've heard that before. You're betting on the jockey, not the horse.
Of course.
I mean, maybe in horse racing, it's a little bit more the horse. But in our world, I mean, I've seen properties that are in great areas. Guess what? They're failing. They're great properties in great areas because they were mismanaged. The person didn't know what they were doing, or they just made bad decisions. So it is about the jockey.
Yeah.
Always.
I think that is funny, just as a really side note. Sometimes the horse, especially in horse racing, so why do we use the analogy, right? But
I know, yeah, I did. Yeah, I mean, we use it all the time, but we have to acknowledge its limitation there, yeah. So let me just tell you really briefly, what do I mean by make the fund look like the syndication? Yeah. I'm talking about the fee structure. Asset management fee, 1%. Why does that need to change? The acquisition disposition fee, 1%. Why does that need to change? Right? The split, 80-20. Why does that need to change? None of this needs to change. So now what we don't do is create a huge $50 million fund and then put lots of deals in it, because it takes forever to raise $50 million and then it takes forever to deploy it, right? Mm-hmm. But now what we do is we like $15 to $20 million funds. So we like putting one deal in, leaving some room for the next deal, right? So we close our funds, see, just like a syndication, when it's over, right? It's closed. Why do we do that? For a bunch of reasons, the least of which is it is impossible to have a Ponzi scheme if you don't have new money coming into a fund.
Yeah.
Right. Not that I would consider doing a Ponzi scheme, but it's not even possible.
Right.
Right. Because you have to have new money. So now we close the fund. Now everybody, they understand what they're in and what they're not in. And so we just keep rolling these funds back to back. Our goal is to have 2 deals in every fund. If we can do that, it's a perfect scenario. We always have a place to put investors. And we always have money in the bank because we have some left over from the last fund and we're on the current fund. Added together, Mr. Broker, we always have the money.
Yeah.
You can see how it looks very much like a syndication. It's just a little bit of tweak here and there.
Cool. So about 2 is the cap, or about 2 per properties per fund based on how much raised.
That's what we prefer. Yeah. Yeah. I mean, because there's no reason to have 5-7 deals in a fund, right? We don't do institutional money. Mm-hmm. There's a whole conversation about that, but we use retail investors.
Yeah.
Because if you have institutional money, they control you.
Yeah.
You're not going to be their employee. And we don't, I mean, it's my business. I want to make decisions and do what we want to do, what makes sense, right? As soon as you let in a big institutional investor, they're the boss. It's just the way it is.
How quickly, I guess one of the other questions investor might have is, since it is a fund model and we're talking about making it look as close to a syndication, the question then is, what is the delay from investing to deployment of capital then?
Yeah, man, you're all over it. So when we used to do the capital call thing, hey, just subscribe and we'll call the capital.
Right.
That doesn't work out with retail investors because they flake. I mean,
Yep.
they just do. Stuff happens, their life happens, and it's not a good idea because the broker expects you to have the money. You can't say, oh, sorry, I was just kidding, right? So we require the money to be deposited when you subscribe. We put it in what we call a temporary investment account. It's a high yield money market savings at a bank. All that interest goes directly to you, not to us. I don't take any fees. It's in that temporary investment account. We allow that to build. Now, if there ever is a frustration with any investor with ours, it is typically because we don't deploy the funds fast enough. They get annoyed. Why? Because you've heard of FOMO. I'm sure you know what FOMO is. I refuse to get FOMO. I've seen too many people get it. And what happens when you're sitting in my chair and you've got $10 million in the bank, you get some pissed off people. We want this money invested. I'm like, look, I am not here to do just any deal. If it frustrates you, I'll be happy to give you your money back. But I am not going to make a bad decision and hurt 50 investors because one or two is frustrated that I'm maintaining my discipline and not getting FOMO. That's the hardest part about doing this business is that, because you get a lot of heat, right? They want their money invested tomorrow. Me too.
Yes.
I'm not making a dime off of anything until I invest it. But you don't want to be, once you're in these deals, you can't pretend like you didn't do the deal and unwind it. And sorry, I made a mistake. Can I get a mulligan? There are no mulligans here. Once you're in it, you're in it. You can't get out of it. And if you screw up, it's very hard to fix. So we're just probably too conservative, but that's the important part. That's the successful part. That's the experience thing that is so important, because inexperienced people, what are they trying to do? They're trying to get their deal.
Yeah.
Because they need the fee, because the fee is how they live. If you notice, I said our fees are 1% across the board. That's the lowest of anybody's fees. Yeah, I'm not here for the fees. I'm here for that promote at the back end. That's what I'm here for.
Yep. Is there a pref there? Like a 6%?
You know what? Again, man, you're nailing all the good questions. We used to have a pref, but let me tell you what happened to us. So let's say you have a 6 pref. Everything's a story with me. I'm sorry. It's just I want to make you understand why everything we do is really intentional. So imagine you have a 6 pref and you got this incredible deal in great location. It's a beautiful asset, but right now it's going to pay 4% out of the gate. Now I got a problem. I mean, this thing's going to scream. You just know it. You just know you want to buy this thing, but all your investors are expecting a 6 pref. Okay. Well, here's what investors hear. 6 pref means 6% cash flow distributions.
Yep.
They don't hear.
Yep.
Some of it will get paid. Some of it will accrue. That's not what they hear. It's unfortunate, but it is what it is. Institutional investors do.
Absolutely.
But retail investors, some do. I don't mean to be insulting to those sophisticated ones, but most people, they hear 6, they want 6. So now I've got a dilemma. I got this 4% deal. So one choice is to close the deal and pay you 4% and accrue the 2 that I didn't pay. And people are pissed. They're frustrated. They're like, dude, I thought this was a 6 pref. Where's my money? I need this money, right? That's a bad scenario. You would agree. Scenario number 2. All right, I do the deal. I pay you, I get 4 from the deal, and then I go into my pocket for 2 so that you're happy. Well, that's just ridiculous. I don't even have to do that. No, you can't do that. You just can't do that. Third option, you can't do the deal. So you just missed out on a screaming deal.
Right.
Because you put handcuffs on yourself. Now, here's the thing. So that's why we got away from the pref. Now, remember, our fees are the lowest of anywhere. They just are. So if you look at an 80-20 deal, if you have a 6 pref, if the deal does 7.5, you're indifferent. The pref is irrelevant. 7.5, like a 7.5% return overall on a real multifamily deal is horrible. It's just horrible. It's a failure, right? It is. In my opinion, that's a failure. So if the deal is such that the pref matters, what do most investors like us, most sponsors like us do? We cut our fees. We do everything we can to put the investors first.
Right.
See, we in our documents have the ability to waive or defer any of our fees.
Very cool.
Why do you do that? Because here's my position, and this is a hard one for a lot of people to take early on. I'm not here for the fees. I'm just not. But here's what matters. You invited these investors into this deal with you. You need to do absolutely everything you can to take care of them.
Yeah.
And anything short of that is not acceptable, in my opinion. Okay? We have in the past deferred fees, waived fees, because that's the only fair way to treat your investors, right? They're trusting you to make good decisions. Now, some things are outside of your control, but it doesn't matter. Results, the only thing that matters.
Yeah. Yeah.
Well, that's what should happen, and that's how we handled it. So now we're not handcuffed with the pref.
I dig it. I heard the quote, you have to be willing to take bullets for your investors. And
you should.
Yeah. How much of this discipline is coming from these practices originated from the time in Deloitte, or were these things developed over time? I'll pause the question there.
Yeah. So when I was at the bank, I did. Do you ever spend time at a bank in the workout department? Those are loans that went bad, and the bank wants to exit the deal. You get a completely different perspective when you're doing workout, number one. Number two, yeah, the CPA thing, but that's not what it's really about. What it's really about is again, this forget about real estate and everything else. This is a relationship that you've developed with somebody. They gave you a boatload of their hard-earned money.
Yeah.
And you got to treat that with respect. You just do. And they're trusting you to not do a stupid deal. And you have to be willing to take whatever heat it is that is necessary. That's what it's all about. You see, sitting in this chair is not about, yes, it's about the deal and the location and all that stuff, but it's really about how you're going to treat people. Because people just want to be treated well. I want you to, here's what I always say to people. Do you think Warren Buffett is perfect? No. You know he's not. He gladly admits he's not. Guess what? I'm not perfect either. But what is Warren Buffett? Extremely transparent. He will tell you exactly what he did wrong. He will tell you he learned from it, blah, blah, blah. We are human beings. We're not going to be perfect, right? But look at Warren Buffett. People, these are relationships. They trust him because they know he's not going to lie to you. He's going to tell you, look, we screwed up. This is what we thought. This is what happened. This is why it didn't work out. We're moving on. Right? We're next to you. Our money's next to you. It's not like it's only your money. See, why would you not run your business that way?
Yeah.
That's what we try to do. Well, that's what we do. There's no try. That's what we do.
Yeah. Great clarification. Right. That's this question. I'll make sure to get you out here on time.
Yeah, no worries. All good.
Who did you model after as you were coming up in the business? You've had a lot of pick. Not only you're Gary, but Warren Buffett has been in the business for a minute. Many of the clients you probably were paying attention to just from a distance along the way. And there's some great thinkers and doers. Again, we opened with Tony Robbins and Cardone, et cetera. But I'll put that question out there. Who did you model after?
Yeah. So I'm 60 now. I've done a lifetime of development, right? I bought every self-development course probably available, right? And so there's no one person per se. As I was trying to figure out, okay, how do I want to develop a culture here at KRI? It is Warren Buffett. That is the model that we use internally, right? Some people, when they market, they're trying to be sensational and dramatic and say wacky things and all that. That's just not what I am. Our model is we want to be the Warren Buffett, Berkshire Hathaway of real estate. Why? Because I watch how this guy is operated. He's been the most successful investor in the world, yet he's been the most transparent. And guess what? He's not perfect. Guess not. He's not psycho running around doing crazy stuff. He's not, right? Like you want, like if I said you could go spend an hour with them, I mean, you give your eye teeth to do that, right? These guys that are super psycho out there, they're getting noticed, but for a different reason, right? So he has probably had the biggest impact. That's how we do everything. That's our brand. That's our model. That's our marketing. It's always, look, would Warren Buffett, this is a question our marketing people ask themselves, would Warren Buffett or Charlie Munger say this out loud?
Mm.
If you said this out loud, would you cringe? Would you be like, that's kind of skeezy, right?
Yeah.
That's our test. So that's the biggest influence. But having said that, I've been influenced by Grant Cardone, John Maxwell, Stephen Covey. I mean, the list just goes on and on. Chris Voss. I mean, there's so many really high quality people. Mark Cuban, Robert Hersher. I mean, the list goes on and on, right? Because I think it's probably too much. But if you just take one or two, study these people, take a few things, don't try to be them.
Right.
That's ridiculous. Take lessons from them and say, okay, let's make that my own. And that's kind of what we've done with everything that we've done. I mean, Grant Cardone, you talked about Grant in the beginning. I mean, Grant is really good at helping people figure out how to think bigger. Clearly, he has done that, right? And so he has certainly helped us do that. And so I take a little bit from a lot of different places, but Warren Buffett is the one that we're trying to model our whole company over after.
I love it. Please excuse me. I do have one more, which is you talked about family being the driver to begin with, kind of set off this journey. Have they gotten involved in this space, or do they think our father Ken is kind of crazy here in the real estate space?
I don't know. You have to ask them if they think I'm crazy. But I will tell you, my daughter left Cleveland, went to Lexington, where she went to University of Kentucky, went to work for a private equity firm for a couple of years there. Learned a lot. All of a sudden, the moment she started working for that firm, our relationship changed in a big way.
Sure.
Because she's like, wow, this is what my dad does. Then she came to one of our live events, looked around at a room full of people, and she came to the realization, holy crap. Like, now don't laugh when I say this, all right? Because this is really just completely opposite of what I've just said to you. But the fact that she now works with us, okay? She left the private equity firm, now works with us. But here's what's really important. I did not understand the impact it would have on me when the daughter that I did her 3 a.m. feeding, that got me into this whole thing, now stood up in front of that room and was like, I couldn't be prouder of my father.
So cool.
That is insane because parents don't think of that. And I didn't understand what an impact it would have on me. That and the fact that we're helping so many people reach their financial goals through passive investing, whatever, right? That's really important. But when your daughter is like, I'm not embarrassed of what my dad does. In fact, I really want to figure this out. And every day she's like, holy crap, man. Remember, she saw the old, John Maxwell says they want to do what you do, but they don't want to do what you did. She watched the did part all along, right? So anyway, I know that was a weird story, but I mean, that is really what it's all about. When your kids are not embarrassed of you and you're a father and you're like, holy crap, this is so cool.
I mean, that's exactly why I asked. I don't think it's a weird story at all. It can be incredibly fulfilling because I would imagine, not there yet, but like you said, it's why you do things. It's why you do things, right? You care, you put everything into it. And so for it to come full cycle, but so really it's got to be super cool and super fulfilling. So
it is.
Ken, thank you for being here. Thank you for sharing the disciplines, the strategies, the tactics, the insights, your mind and your heart with us around these things. Appreciate you. You mentioned it a couple times, but tell us where people can learn more about you and your team.
Yeah, just go to KRIPartners.com, KRIPartners.com. Just reach out to us, reach out to our team. We'll help you figure out what makes sense for you. And just here's what you need to know. When you reach out to us, we're not here to sell you anything. That's not what this is about. This is about helping you think through, because we've learned a long time ago, it's very hard to coach yourself. It is so much easier to help other people because you see the world differently. I don't know why it is. Myself, it happens to me too. If we can be that outside party to help you, like, yeah, this makes sense. Okay, now you're comfortable. And hopefully we can help you on the passive side or the active side. Either side, I just want to help you create wealth.
Outstanding. That will be in the show notes. Go there, check it out, and reach out to Ken and his team. Thank you, Ken.
Man. Thanks.
Thanks for joining us on another episode of Path to Passive. We love connecting with our listeners and those on the path to architecting their wealth and improving their lives. Feel free to let us know what topics you'd like to see in the future episodes. Get in touch with us through email or Instagram. See you next week for a new episode.